Investing feels complicated, especially when you're just how to begin. Step by step. Step 1. Before investing a single dollar, make sure your financial foundation is stable. That means no high-interest credit card debt and at least 3 months of basic expenses saved. Investing without stability creates stress, and stress leads to bad decisions, stability first, growth second. Step 2. Understand what investing actually means. You're not gambling. You're buying ownership in real companies, or lending money through bonds, or owning diversified funds. If you can't explain what you're investing in simple terms, you probably shouldn't invest in it yet. Step 3. Start simple. For beginners, broad index funds are often the smartest option. They spread your money across hundreds of companies. Instead of betting on one stock, you're investing in the entire market. It's boring, but boring builds wealth. Step 4. Consistency beats timing. You don't need to predict the market. You don't need to wait for the perfect dip. You need to invest regularly, every month, even small amounts. Over time, consistency compounds. Step 5. Think long-term. The market goes up, and it goes down. That's normal. If you panic every time it drops, you'll sabotage your own progress. Wealth is built over decades, not weeks. Step 6. Avoid complexity. You don't need 10 different accounts. You don't need risky strategies. You need discipline. Simplicity reduces mistakes, and mistakes are expensive. Starting is the hardest part. Not because it's complicated, but because it feels unfamiliar. You don't need to know everything. You just need to begin. Stability, simplicity, consistency. That's how real wealth is built. If this helped you, subscribe. We're building financial intelligence step by step. One of the biggest reasons people never start investing is fear. Fear of losing money, fear of making a mistake, fear of starting at the wrong time. I felt that too. But here's the truth. Not investing at all is often riskier than investing wisely. Inflation slowly reduces the value of your money every year. Doing nothing has a cost. The key isn't avoiding risk. It's managing it. Another question beginners ask is, where do I actually invest? Start with a simple, regulated brokerage platform. Look for low fees, strong reputation, easy-to-use interface. You don't need the most advanced platform. You need one that makes investing simple and consistent. When people first start investing, they often try to move too fast. They chase trends, they follow hype, they try to double their money quickly. That usually ends badly. Long-term investing isn't exciting, but it's reliable. Avoid shortcuts. They're expensive. Another common question, how much do I need to start? The answer is simpler than most people think. You don't need thousands. You can start with small, consistent amounts. What matters more than the size of the investment is the habit of investing regularly. Small amounts, invested consistently over years, can grow into something significant. Starting without experience isn't a weakness. It's normal. Every experienced investor was once a beginner. You don't need perfect timing. You don't need perfect knowledge. You need a clear plan and the discipline to follow it. Start small, stay consistent, think long-term. That's how investing stops being intimidating and starts becoming powerful. If this helped you feel more confident about starting, subscribe. We're building financial intelligence, step by step.